Good afternoon. This is Chris Brecher with the Chart Patterns Mastery / Simpler Trading free video for June 10th, 2025. What's this about? Well, it's about things attempting to go to all-time highs. That's how it looks to me. Like I warned a long time ago, and this is why most of the ideas we've had have been long ideas. I'm talking about swing trades. Why have they been longs? Because the German market was a tell. After this, when it had that V bottom and went to a new high, we were like, you got to look for long ideas. So that because of this, because the ES is close to an all-time high, the NASDAQ's close to an all-time high. So right now, until proven otherwise, you have to wonder if you have to go to a new high before you can go down. It's sort of weird how that happens. Now, why are markets going up when yields are going up? Well, I'll show you why. Because of what I've been showing, it's almost like somebody copied what I've been showing. In fact, Spot Gamma today in their blog actually had my StockTwits post about buybacks. I'll show you that in a minute. So the point in here is this. Go and look at this. This is from Benzinga. Buyback authorization surged to multi-year high. Look at that. Wow. Now, why is that a big deal? It's because bad news is less likely to affect the markets negatively if companies are buying back stock. Like you've heard before about the Fed put and the Trump put and the, Biden put. Or the Powell put, which is basically that the markets are going to have something holding them up underneath the market. Well, now you have buybacks. But, and this was sort of cool that it was in Spot Gamma, is go into this and you'll see what we're talking about. Go into the SPX and go into here and see when the preponderance of buybacks are. They're in here. Companies voluntarily don't buy back stock 5 weeks prior to earnings. So if I go and make it easy on you and just go to StockTwits and show you my post, I'll show you. Make it easy on me and you. Here you go. All right, there's one of them. This is more likely to follow similar charts in the buyback blackout area. How about in here? Well, we've been long GNRC because of hurricane stocks, but that's what I'm watching. I'm watching the VIX near its lower Bollinger Band. I'm watching the S&P try to pinch the Bollinger Bands, but it's much less likely to work until that. So when you have a divergence in the bonds where the yields are near their high for the year, it's more likely to affect the ES when most companies are in the buyback blackout zone. So let me actually draw that again for you. I'll show you what we're talking about. So start it with JP Morgan. That's how we usually do it. And end it with Apple. That's JP Morgan's 35 days prior to earnings, 5 weeks. That starts tomorrow. Tomorrow. As you see, most of the time when JP Morgan has a buyback blackout, it just underperforms. It doesn't have to go down. Bad news is more likely to affect it. That's all. Bad news is more likely to affect it negatively. But that is something to keep in mind. Now, when is Apple? Apple is at the end of the reporting period, right near August 1st. So what I would do is just take 35 days from tomorrow. Well, this is July 14th right here. So that's right here, right today. That's your JP Morgan in here, right in that area. But then take 35 days from August 1st. So that would get you to the end of July. So that's right there. So that area is the buyback blackout. Now, the thing is, if you go to Yahoo Finance, you'll see that the maximum amount of stocks in that blackout is right here, right in that area. So that's about July 20th. You'll see it in a lot of other periods that's coincided with tops. But it doesn't mean a top. it means bad news. So if the bonds make a new low, it's much more likely to affect the markets then. So when they're in this buyback blackout. So even though you have this on the left, you have the S&P, and on the right, I'll put the bond market. And you're going to see the bond market's near new lows. So you might say, well, why aren't the markets getting hammered? Well, they got hammered here when the bond market was getting tanked. But then the buyback started right in here, even though bonds were still going to new lows. So it's going to take that air hole of lack of the put protection to make this correlate. So what I see is if this goes down to here with the CPI, this probably won't go down a lot. It might have to go to a new high first, but it is a huge warning. So that's what I'll be watching. In the meantime, though, don't get me wrong. What isn't going near new high? Well, what isn't near new high is the transports and the Russell. The Russell's near resistance, though, but if they're going to get up to new highs, you're going to need to see it in the speculation, the CRSPs of the world. As you see, it's already had a nice move. ALT's already had a nice move. VKTX has already had a nice move. We were in a number of these. So now we're in something like an NNOX. More boring, but still on the way up. So you're still going to get a lot of speculation. We're still going to look for those type of moves that have this kind of pattern, like that in a bull flag. So we'll look for those. Have a great night. Talk to you later. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.